point of any business. The starting point of any business is sales. Like starting point of any income statement is the top line जिसको हम कहते हैं that is sales or revenue. For example, this is 1,000. The second expense is cost of goods sold. So I'm assuming cost of goods sold is a variable cost. Okay, mainly it's a variable cost. I'm assuming. Practically, it is not a variable cost. It comprises variable and fixed cost, but here I'm assuming just for the sake of explanation that it is variable cost. 400. Okay. Then there is a fixed cost. For example, that is 200. Then there is operating profit. And that is 400. Let's forget about interest expense, tax expense, and the other expense. So revenue minus variable cost minus fixed cost, that is profit before interest and tax or operating profit. This is called operating profit. Okay. These expenses include two types of expenses: cost of goods sold and SG&A. Cost of goods sold and SG&A has two types of expenses, variable and fixed. Okay, now let's suppose your business is progressing. Your business has achieved a remarkable growth and your revenue has increased to 1,500. 50%, there is a 50% jump, 50% rise in the revenue. And revenue 1,000 say 1,500 over. Now the every variable cost which is linked with the sale will also increase with the same growth. So cost of goods sold will increase by 50%. It will be 600. So fixed cost will remain fixed. I'm ignoring the inflation. Fixed cost will remain fixed. This is 200. So your operating profit is 700. Now, if you look at the magic, your sale has increased by 50%, but your profit has increased by more than 50%. How much? 75%. Sale बढ़ी है 50% से. Sale has increased by 50%, but profit has increased by 75%. Okay. For example, if your sale decreased by 50%, 500. Variable cost which is linked with the sale will also decrease by 50%. 200. But the fixed cost will remain fixed. 200. So this is scenario number one, scenario number two. So fixed cost has decreased by, revenue has decreased by 50%. Variable cost will decrease by 50%. Half हो जाएगी. Fixed cost will remain fixed. So this is 100. Now, if I ask you, how much revenue has decreased? 50%. How much profit has decreased? So you will say, you will calculate the change divided by the previous. So 75% negative. For a given level of revenue change, profit will change more. For a given level of revenue increase, profit will rise more. Why? If revenue is rising by 50%, profit should rise by 50%. If revenue is declining by 50%, profit should decline by 50%. No. If revenue is rising by 50%, profit is not rising by 50%. It is rising by 75%. If revenue is falling by 50%, profit should fall by 50%, but it is not. It is falling by 75%. Just because of this fixed element. Just because of this fixed element. This is called operating fixed cost. Operating fixed cost. And because of this operating fixed cost, there is a term called operating leverage. Whenever there is a word fixed cost, the word leverage will arise. Like there is a very famous term, financial leverage. What is financial leverage? I will pay fixed amount of interest and will enjoy the capital. You must have heard that people are using leverage in cryptos and other stocks and other commodities. What is that leverage? I will borrow some amount, pay fix, and enjoy a multi-million type of gain or loss. So this is, you will bear operating fixed cost. Everything is changing. Revenue is changing, cost of goods sold is changing, PBIT is changing, but fixed cost will remain fixed. So the more you have fixed costs in your business, highly sensitive your business will become. So look at the uh, relation. For 50% revenue, your operating profit is moving by 75%. So there is a concept called operating leverage. That is equal to, the formula is equal to contribution divided by PBIT. Okay. Contribution means sales minus variable cost. Okay. PBIT means sale minus variable cost minus fixed cost. So look at here. Sale minus variable cost is 600. Sale minus variable minus fixed cost is 400. Right? So what is operating leverage? 1.5. Whenever operating leverage is more than 1 for a given level of change in revenue, your profit will change more. So what is the interpretation of this 1.5? If revenue is changing by 100%, profit will change by 100 into 1.5, 150%. If revenue in our example is changing by 50%, 50 into 1.5, your profit will change by 75%. So जब भी आपके बिजनेस में फिक्स कॉस्ट होगी, whatever the fixed cost your business is, for a given change in revenue, your profit will change more. So now look at this formula. This is exactly the opposite. Profit is changing by 75%. Sale is changing by 50%. So what is degree of operating leverage? 1.5. So in exam, maybe degree of operating leverage is given 1.5. An examiner is saying that sale is changing by 50%. How much profit will change? You can solve this. So you need to remember two formulas. What is operating leverage? Contribution divided by PBIT. Then remember this formula. Degree of operating leverage. This is same. Change in profit. Which profit? PBIT. Divided by change in sales. If this is 1.5 and you know the sale is changing by 50%, so you can predict profit will change by 75%. The more you have fixed costs in your business, the more operatingly leverage you are. So let me give you the practical example. Apple. Apple Cement. It's a cement company of Pakistan. Kohart Cement. Okay, I bought a share of Maple Leaf and I didn't bought share of Kohart Cement. हुआ क्या? So in last 3 months, Kohart Cement shares was rising. Kohart earnings was rising. Maple earning, instead of rising, it falls. And I was thinking, both are in the same industry. Both are in the same products. Both are manufacturing the cement. Both are selling the cements in the market. Maple brand is more famous compared to the Kohart. If you are building your house in Lahore and If you ask any, even the labor person, he must know the Maple brand. Nobody knows the Quad brand that much. Everybody knows the Maple brand. ये fact है. But still, its earning was falling. Why? Maple has a very big plant, large plant, having large plant. What is the disadvantage of large plant? Large fixed cost. You need a large revenue to cover fixed cost. And once you cover that fixed cost and whatever you earn over that, that will be your profit. So, firstly, this company is struggling to cover its fixed cost. सोचें, once it able to cover the fixed cost, whatever it earns more than that fixed cost, that will translate into profit. So higher the fixed cost, more sensitive, more volatile your profits will be. Okay. So if this is the Maple, this is Cohort, this is their sales, this is their fixed cost, variable cost. So if this is Maple has a higher fixed cost, so its profit are volatile. कभी ज़्यादा कभी कम. Cohort has a fixed cost but lower fixed cost. So it has less volatile profit. So which company you should buy? Now, in 2025, if you're thinking that economy will revive, there will be more economic activities, there will be more construction activities. So what will happen? The revenue of both companies will rise. But now, if the revenue of Maple is rising, its profit will more rise compared to the Cohort. Because when the Maple will able to cover the fixed cost, whatever Maple will earn, that will translate into profit. Okay, if you're thinking that economic activities will go down in the future, it will slow down in the future, you should not buy this. Because if the revenue is falling, what will happen? It will not be able to cover the fixed cost. Fixed cost is fixed. You have to cover that. Its profit will speedily go down.